Oh, look, there's a scratch on the mirror. Well, that's it, they're going to ride it off. Well, hello everybody. I hope you're all well. Welcome back to the channel. Just leaving mine. Bit of a different video today, and I'll tell you what, it's a bit of a different video because, I haven't really thought about how noticeable it is, this topic that we're going to talk about, because of another phone call that I got a few days ago, and it's a phone call that I get quite a lot, and I didn't realise I got it quite a lot until a couple of days ago. The reason why I probably get this phone call quite a lot is because of my history and doing vehicle damage assessing. But the question is, and straight away I'd like to hear from people across the whole of this video. I'd like to hear some comments about people that have gone through this. And the pretty simple question is, people asking me how on earth their car has been written off by an insurance company for minimal damage. Now, obviously minimal damage can have a very wide spectrum of of differing levels of damage depending on who's looked at the car and what they know about cars. You know, there is a lot of complex different areas that come into writing off a car, or at least there used to be. I ain't entirely sure there are anymore, because I still have friends that are vehicle damage assessors right now in the insurance industry. They're still doing the job that I used to do, and they are the ones that I used to work with in different businesses. You know, they've all sort of spread about a little bit now because of promotions, that sort of stuff. However, I gave a couple of them a ring yesterday to see how different it is from when I did it. And for this video to make sense, I've sort of got to tell you a little bit of how it used to go on, to make sense of how it goes on now. Just pulling into the old yard, I just got to put a battery on a car. That's the old Red 1 Series actually, and I'll quickly put this battery on a car, then we'll continue. Oh, you know, look at that nice bird poo state. This old Mondeo part exchange is hanging. Look at that. I've got to get that off. Oh, look, there's a scratch on the mirror. Well, that's it, they're going to ride it off. Right, that might be a bit extreme on it. Well, might not be a bit extreme on this one. Bless it. Right, we're back. Sorry about that. So, to get back to what we were talking about. So I'm just going to quickly explain what used to happen in a total loss scenario. So I'm guessing a lot of people that will be watching this video will have been through this scenario. Back when total loss categories were category Ds and category Cs. Everyone will have heard of category Ds and category Cs because it's changed now. But 10, 12 years ago and before, salvage categories went A, B, C and D. You know, it was very easy to understand. And the least damaged salvage category was a category D. Now, how a car became a category D, two things were most important on a category D: the cost of repairs, actually three things: the cost of repairs, the value of the car, and the nature of the damage to the car. And so that is where a lot of people used to come unstuck when they bought a category D car that had minimal damage to it. Because I used to get a lot of phone calls from people saying, oh yeah, I've bought a category D car, there wasn't any damage to it, it just had a scratch on the bonnet or something like that on a 50 grand car. Now, straight away, that never made any sense, because that wasn't the truth, clearly wasn't the truth. I'm not going to go into salvage categories too much. We could do that on another video, but that's not what we're looking at here. But the way it used to be worked out, I wasn't ever very good at maths, so we're just going to work on real simple figures here. Say you had a car that had a market value of 10 grand, it was in an accident and the damage was 8 grand, that's 80% of the market value of that car. Straight away, that car can fall into a constructive total loss, which means that car will cost the insurance company less to total loss than it will to repair it. And the way that works is you've got 80% of the market value of that car, and the 20% between 80 and 100% is made up of the salvage return that the insurance company will get for that car from a salvage company. That's the way it used to work. And it used to be quite good because you would have the ability as an insurance engineer. You used to be able to get so you would get an insured, shall we call them, or you'd get a customer that would come through to you. Their car's been in an accident. You've appraised the car value. You've done an estimate on the damage from what you can see the damage is to the car without stripping it, and you've come out with a repair cost. Now, if that repair cost was, say, 82%, yes, it put it in a category D total loss situation. As long as it didn't have chassis damage, blah, blah, obviously, but it put that car in a category D situation. Yes, it puts it as a total loss. However, as an engineer, you did have the ability to repair that car, because say you get in a situation where you've got someone that has owned a Honda Jazz from brand new. It's 10 years old. It's done 10,000 miles. It's been serviced by Honda every year. You know full well that that person is not going to be able to go out in the marketplace and buy that car again. They've had it from brand new. They know everything about that car. So that left you in a situation where you'd go back to the repairer. You'd get the repairer to look at that car, strip any panels off it that they have to make sure there's no damage underneath. They say, yep, there's no more damage. We'll repair that car. We'll contract repair it at that value. So the repairer gets the job, because total lossing for repairers is a nightmare because they get no money for it. So they'll contract repair that car, and if damage becomes apparent through the fault of their own from not looking at it properly, they have to swallow it up. And 9 times out of 10, they get a good job. The customer gets their car back. Everyone's happy. That's how it used to happen. It clearly doesn't happen like that anymore, and it doesn't happen like that anymore mainly because of cost, obviously. It all comes down to cost. What I just described to you, if you think about it, that whole process takes a long time. So not only does it take a long time, it has to go through the claims department, it has to go through the engineers department, it has to go to a repairer, that car, then so the repairer puts that person in a courtesy car because they've not got no way of getting about, their car's been written off. So, the repairer's got a courtesy car out. It all took a long time. If it then transpired that that car was going to be a total loss, the engineer has to do a total loss report. The car then has to go to a salvage agent. They have to get it picked up by the salvage agent. The customer is still in that repairer's courtesy car. And I tell you what, that got really messy most of the time, because when it's a fault claim, it's your own fault and you're in a approved repairer's courtesy car, then you get a phone call saying your car's been total lost, and you've got to take that courtesy car back. Even though you haven't got a new one, you've got no way of getting about. And I tell you what, a lot of people wouldn't take them courtesy cars back. They'd be like, well, I haven't found another car yet. I haven't got any money from you, I can't take the courtesy car back. I can't get about. That isn't the insurance company's fault, and there is very few insurance companies that would give a policy where you would get a courtesy car no matter what until you had your money. Non-fault claims are very different. If you're going through a third party, very different. We'll get onto that another day. But for now, we actually had to report. I work for two of the biggest insurance companies in the country. And on a couple of occasions, we had to report courtesy cars stolen to the police because customers wouldn't bring them back. So the policy and all of them different policies clearly had to be streamlined for insurance companies not to take so long processing claims. It started to get really silly, started to get like buying a house with some claims. They'd go on and on and on, especially if I was the engineer, because you can imagine I wanted to try and get all of the cars repaired, because most people wanted their cars repaired. It doesn't really work like that anymore. And this is where it comes on to sort of the new age of total losses, which is why it's a bit like what it is now. I'll tell you what, we're just pulling into work. We'll pull into work, and then we'll get on to the next bit of this conversation in a mo. I'll just park up, and then we'll carry on. Oh, good Lord. Let me sort that sun out. That's too bright. Right. There you go. So, as I was saying in the car and just outside when we got here, the first time that I sort of became aware of this situation since I had come out of being a vehicle damage assessor. About 3 years ago, I sold a lovely, and I know that, they're all lovely, but I sold a lovely 2005 Volvo XC90 to one of our customers that had bought a car before, and they wanted a big old SUV type thing. They've never had one before. So they bought this XC90 off us. It just so happened that it was a one doctor owner car, full Volvo history, had a cam belt at Volvo like a year before we sold it, done 60,000 miles, best spec you could buy, had factory rear entertainment. You know, it was a stunning car, almost like a one-off for like a 2005 XC90. You know, they're hard to find like that. And about 8 months, probably something like about 8 months after I sold that car, I got a phone call from the customer saying that she'd had an accident in it and the insurance company had written the car off. Now, she phoned me up at about 3 o'clock in the afternoon, and I said, oh, okay, if they've written it off, you know, it must have been pretty bad damage, blah, blah, blah. And I said, when did you have the accident? And she said, this morning. And I was like, what, like this morning of this afternoon when I'm speaking to you? And she was like, yeah. I said, well, how the hell have they appraised that car already? So I sort of asked her what she had done regarding that claim, because, you know, it's saying appraised and things like that might confuse her. So all she said was, I phoned up my insurance company, and the minute that I gave them the registration and told them it was an 05, the first person I spoke to said it was going to be a total loss. They just said, oh, the car's going to be a write-off. So it wasn't even an engineer. It was a claims handler. Straight away, they said it was going to be a write-off. And I said, well, you know, what sort of damage was it? Was it bad damage? And she was like, well, no, not really. I just drove over a low bollard, which went underneath the car. And when she heard it sort of go pring when she went over it, she reversed back and pulled the front bumper off the front bumper corner off the car. That's all it did. And so I was like, you can't write that car off for that minimal damage. You know, I didn't want her to lose the car in the first place. I was never going to find her another one with that history, and that it was never going to happen. Yeah. So what I did, I got some pictures of her car that she sent to me. And a long story short, I'm not going to go into it because that isn't what this video is going to be about. But a long story short, I can't exactly remember what I sold that car for, but it was about $5,000. Clearly, there wasn't even £3,000 worth of damage, more like struggling to be £1,000 worth of damage. Now, here's a couple of pictures of that car in its damaged state, because a long story short, after they'd gone through the total loss situation, they offered my customer the ability to buy that car back, the salvage of that car back. Long story short, she phoned me up and says, look, Kev, the car's a total loss. She didn't want the car anymore. Not necessarily because it had been crashed, but I think there might have been other reasons, whatever. She got it into her head that maybe she's got to find something else in a very short period of time. I don't know. But she offered the car to me back. And I said, 100% I want that car back. And he said, do you know what? I will never normally get involved in salvage categorised cars for a completely different reason. And I'm not going to get into that now. But this one clearly wasn't salvage. And I repaired that car by replacing the bracket behind the front bumper. The front bumper was untouched. It was perfect. All it had done had ripped off the bracket behind the front bumper. It didn't even mark the paint on the original front bumper. The front bumper already had a scratch on it from a previous little scuff sort of thing. Nothing from this impact. So I took the whole front bumper off the car. I replaced the bracket off the back with a brand new second-hand one. So I got a used one from a salvage agent, but you could have bought a brand new one easily. It was about 500 and something pounds for a brand new bracket. I got a second-hand one for 200. Replaced it all, put it back on. The car was as good as gold. It didn't even look like it had ever been hit. The problem I've got with that is £5,000 worth of Volvo, £1,200 worth of salvage return, which means that insurance company's outlay was £3,800 for her to settle that claim after they've given her the money back. That does not make financial sense. It doesn't make financial sense, and it didn't make financial sense. That's where the problem is coming from with what's going on now. That claims handler had been given a matrix, and on that matrix would have had loads of different things on it, like age of vehicle, has this been impacted, what's the damage like, does the engine run, blah, 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 all that sort of stuff. And as soon as she said it was an 05, they wrote the car off. It never even went to an engineer. It went straight for the claims handler. Now that is the problem that we've got now. That is what's happening. Because of what I told you about what used to go on, going to an engineer, appraising the car, seeing if it's going to be a total loss, going back to the repairer, putting them in a courtesy car, all of that, insurance companies wanted to get rid of all that processing. So then they suggested that they're going to get matrices for claims handlers on initial phone call when someone phones up and says they've hit their car. And then claims handlers are looking at a matrix and see if certain things tick the box. Now, this is exactly what's happened with this S3, which I'm now about to show you, which is the guy's car that phoned me a couple of days ago. Now, we're talking about a 34 grand Audi S3 here, which he bought a month prior to this happening. And this is the damage on the car. Now, I think he'd had it for a month. He'd done 4,000 miles in the car. They valued the car at 29.5 grand. Yes, it was a bit of a loss from what he paid. He got gap insurance. He got all his money back. That isn't what this is about. The problem that we've got now is that when he's phoned up and he's given a description of the car, and as you can see, the damage really isn't that bad for a car of this value. He's obviously said, well, has it hit the wheel? He said, yes, it has hit the wheel. You know, has it hit the wing, blah, blah, blah. Whatever he said, you can see the damage on these pictures. They've written the car off. Not only have they written it off, it's bypassed the Cat N, which is the new Cat D. Cat N stands for non-structural. That is the most minimal damage value of a total loss salvage category that you can get now. They've bypassed the Cat N. They've put that as a Cat S, which means it's got structural damage. Now, you can see by the damage. Look at the gaps on the bonnet. Yes, the gap on the bonnet has opened up, but that's because the bonnet is damaged. It's nothing to do with chassis damage, no structural damage. Look at the gap between the wing and the door down the A-pillar. Perfect. Hold on. Maintenance call. Yeah, that car has got no structural damage. Okay, do you know what? I know I haven't appraised that car. I haven't seen it in person. I haven't seen it in real life. ABI guidelines have to be adhered to. Yes, there is possibility that S3 had damage on the inner wing. If it had damage on the inner wing, then yeah, right, that was a Cat S. I haven't seen it. The owner of the car told me that it didn't have any damage on the inner wing, nothing on the inside of that. He said nothing at all. But it's not massively important, but I couldn't see that being a Cat S with, you know, half of the value of repair cost of the car right there. Anyway, not only that, they've come back and told this guy that the damage to repair that car is going to be 16 grand. Now, I've got to be honest, from what I can tell, that has been somewhat inflated, shall we say. I can't see 15, 16 grand's worth of damage on that car. However, sorry about that. I had to get a drink. Got a bit of a headache coming on. We'll put that over there. So on that particular Audi, I think what they have done is they've inflated the repair costs on that car. And I'll tell you why they've done that. On the initial phone call, that car has been instructed to go straight to a salvage agent, which bypasses all of the necessary going to a approved repairer, courtesy car, all of that bypasses all of that. So then all that's got to happen is that claim goes through to an engineer. The engineer creates an estimate for the damage on the car. They salvage categorise it. Job done. Settle the customer. Get the salvage back from the salvage agent for that car. And that is where This is the problem. Salvage now is such a massive business, multi-billion-pound business, that salvage agents and salvage companies can give such good rates to insurance companies for salvage. They can write anything off. Any car, doesn't matter if it hasn't got damage to it, they can write anything off and pretty much make it worth the insurance company's money. That's the problem we've got here. Yes, there is a massive advantage for salvage companies having crash damaged vehicles because certain cars can't get repaired because of parts availability. We know that parts availability has been a problem. It's a little bit better now, but we know it's been a problem. What?
And get lipstick.
I've got to stop filming. Claire needs to get a lipstick. Yeah, so that is the massive problem we've got here. Anything can be written off. Another problem is, say you own that S3. Say you watching this video now. Say that was your S3. And it's got that damage on it. It's repairable. You know it's repairable. Then they tell you, sorry, Mr. Smith, but your car's been taken to a salvage agent, so we're going to have to get it back from the salvage agent to repair it. That now doesn't happen, ever. Because first thing they do when your car turns up at a salvage agent is pick the thing up with a forklift. Underneath it, brake pipes. A car will 99% never come back out of a salvage agent. Because you think, say that's your car, it comes out of that salvage agent, all of a sudden it's got a scratch on the wing. That damage weren't there before, so you've got to repair that as well. It opens up the biggest can of worms ever. So that just doesn't happen. So now you've got to think, and this is the biggest. It creates a massive problem because you think all of the repairers out there, a total loss to a repairer is useless. There's no value to a repairer in a total loss. They don't get the labour to fix the car. You look at that S3. There's a lot of labour on that. That would be a beautiful repair for a repairer. You know, you've got to paint the bonnet, the front bumper, the front wing, the driver's door. You've got to blend into the door, into the offside rear door. There's a lot of labour for the repair. They ain't getting that repair because it's just gone straight to a total loss. So I mean, that is, to a point, that is why this is happening right now. It's just insurance companies trying to save money. It's insurance companies trying to get claims through quicker. It's insurance companies not wanting the liability of fixing a car. It's insurance companies thinking, oh, has that wheel been hit? I mean, has it got gearbox damage? Has it got this? Has it got that? That S3, you could put the whole side on that car. New knuckle, new wheel bearing, new shock, new spring, everything. It would wear that easily, that damage. But they don't want to get involved. Do you know what the worst thing is? When that car gets repaired, yeah, right, it's going to be registered as a Cat S. But there is no fundamental levels of repair that a categorised car needs to meet to come back on the market. You know, I mean, with a Cat S, it might have to get MOT'd. What's an MOT tester going to know? An MOT tester wouldn't have any idea if a chassis leg had been made out of plastic, painted over, engine put back. They wouldn't even know. They wouldn't even notice it. So, there's a lot of disadvantages to what's going on. But the reality of why everything gets written off now, it comes down to time for the insurance companies and the massive kickbacks they're getting from salvage companies. That's all it comes down to. I mean, and you know what, weirdly, some of the insurance companies have to swallow up a loss every now and then because, oh, hold on. Oh, right, sorry about that. It's all going on. Just had the windscreen chip repair guy turn up, had someone else that just turned up that wanted to sell their car, which we might be buying. So we'll see. So yeah, I mean, in a nutshell, that is pretty much the reason why everything's getting written off these days. Because they can. That's it. Because they can. They can, 9 times out of 10, they can have an insurance claim go through and spend less money writing off the car than fixing it. That's it. You know, it's pretty mad, really, because it's not exactly taking the insureds, the clients, the customers' interests or best interests into consideration, is it? Really, you know, I'll tell you what, so I'll say thanks for watching this video. I'll tell you, if anyone watching this has been through a similar scenario to this, please stick a comment down. I'd like to hear what you've been through, you know, what damage you had on a car. Did they write it off? Did they give you a good value for it? I mean, we can look into another video if you want to. We can look at salvage cats. We can look at values if you're going through a total loss and what really happens and how to get the best value for your car. I don't mind showing a bit of an insight to that. But I mean, sorry it was a bit of a boring one, me just sitting here talking. I don't normally do this sort of thing, but I've found, you know, so many people asking me about it recently. I thought I'd do a little video. So I'll tell you what, thanks for watching this one, guys. Hit that subscribe button, hit that like button, hit that notifications button if you like what's going on. I mean, the next video is not going to be like this, but don't know what it'll be. Thanks a lot for watching this one. I'll see you on the next one. Thanks a lot. Bye-bye.